Good morning, friends. Good morning. Okay, guys, I hope audio, video, both is clear, guys. Can we start NBFC? Okay, guys. So, the way we discussed banking on a almost similar note, this is NBFC. So, in banking, what we discussed in particular about the NPA provision, classification of advances, capital adequacy ratio, and some important rules. The same thing applies in this NBFC also. So in particular, the important points are once again classification of advances, NPA provision, and net own fund. These three are extremely important. The weightage of chapter is around 4 to 6 marks, but generally they ask 4 to 6 marks question in every attempt. And like banking, in this chapter, importance points are there, but this chapter is not so long as banking. So today only we will conclude the chapter, and we are supposed to understand the basics, and we will do 4 questions which are important ones. So as we have just completed banking, it will be definitely very much easy all of you to understand these concepts also. Okay. Now guys, the first is a registration. Remember guys, as bank has to register with RBI, this guys also has to register with RBI. So they have to register. For them, it is compulsory. It is compulsory. Now, this is a small distinction between NBFC and a bank. Okay. Whatever points I am not discussing, okay, you are not supposed to read that. You can put it in a ABC category, so you can put in a last important item because it is not that much needed. types and categories. Okay, so they are basically two category: deposit taking NBFCs and non-deposit accepting NBFCs. So guys, this is why important, just a sentence, not a paragraph at all. When we will do the questions today only, we will understand whether this is deposit taking or a non-deposit taking NBFC, and accordingly some rule will change, not all but some rule will change. Simultaneously, there will be also another classification called systematically important and non-systematically important, SI and NSI shortcuts. Okay, so when we will learn the chapter, when we will do the questions, in particular NPA classification and provisions, we have to understand whether it is SI or NSI. Depending upon that, small variation will be there. In particular, when we will discuss NPA provision and classification. So you are supposed to remember the name, nothing else in this particular paragraph. These are various types, but it is fine if you don't read it. Okay, from this point, important points starts. Net own fund. Net own funds. So it is 2 crore, and this is the important formulas. Now guys, before starting this formulas, let me recall you that in case of banking, we calculate capital adequacy ratio. If you remember, we calculate capital adequacy ratio, and in that we calculate capital fund. And if you recall, in that way calculate tier 1 plus tier 2. Okay, and if you recall, because we did it in immediately last session. Okay, and in tier 1 we understand there is a capital, free reserves, security premium, and there were some deductions also like losses and DTA and intangible assets. Then there were tier 2, in which there was revolution reserves minus 55% and all that. So just keep in mind that concept of capital adequacy ratio, in which we calculate capital fund, tier 1 plus tier 2, minus we deduct some of the important items like DTA or losses or subsidiary investments by the company. We all deducted that, and that we get the capital fund. More or less same logic is over here. Same logic is over here. In banking, there were so many things. Here, the things are restricted. So compared to banking, this calculation is little bit easy. Okay, so if you keep that in mind, then it will be easy to understand. Okay, what is own fund? Remember guys, first we are talking about the own fund. Aggregate of paid up capital. First one is a paid up capital. Preference shares, which are compulsory convertible into equity. Free reserves, share premium, and capital reserves arising out of sale of asset. So guys, it's a first, second, third, 4, and 5. And guys, if you recall banking, there were same 5 items. Same 5. If you refer what we discussed in capital adequacy ratio, in tier 1 there were same 5. Okay, now excluding reserves created by revaluation. Remember, it's a word, excluding. So we are not supposed to take revaluation reserve in own fund. Okay, now after deduction, now that is what we are supposed to minus. Okay, first is loss, accumulated balance of loss. Second is a intangible asset and deferred revenue expenditure. Deferred revenue expenditure. So it is called own fund. Own fund. So what is own funds? Are paid up capital plus preference shares which are compulsory convertible into equity, free reserves, share premium, capital reserve arising on sale of fixed asset, less three items: accumulated balance of loss, that is loss carry forward, intangible assets, and deferred revenue expenditure. So this is called own fund. Now what is net own fund? So from own fund we have to minus. So from own fund we have to minus investment in subsidiaries in the same group or other NBFCs, minus book value of debenture, bond, loan, advances, including hire purchase, lease finances made with subsidiaries or the same group. So in short, you have to minus investments in subsidiaries, either it is debenture, bond, or whatever. But important point is to the extent this sum exceeds 10% of own fund. To the extent such sum exceeds 10% of own fund. So this is own fund. So if it is 100, say for example, if it is 100, then 100 into 10% is 10. So we have to find out such investments minus 10, and whatever amount is there, it should be reduced from the own fund, which is known as a net own fund, So guys, read this once again. It is on your page number 9.11. Very important, guys. Read it once again. I am giving you 30 seconds, 35 seconds, and then we are starting a question of this. Please read it properly so that when we will do the sum, you are able to do it very properly. Just giving you 30 seconds only. First is own funds, and then there is a net own funds. So guys, I got some mails regarding इन बैंकिंग के सर ये यूनिट में ये थियरी पॉइंट्स हमें पढ़ने हैं नहीं पढ़ने हैं. ये यूनिट में ये हमें थियरी पॉइंट्स पढ़ना है कि नहीं पढ़ना है। सो मैंने रिस्पॉन्स भी किया था मेल पे, और फिर से एक बार बोल रहा हूं गाइस, जो इंपॉर्टेंट पेजेस ऑफ मॉड्यूल हमने डिस्कशन किए ड्यूरिंग दिस एंटायर सेशंस, ओके, दैट यू मस्ट रीड. Remaining, you can keep it in a, non-important category, which is not that much important. So because बहुत लेंदी मॉड्यूल है, बहुत सारी बातें हैं, ओके, और वो आपके समझने के लिए है. सो इफ यू डोंट रीड that entire big modules, then it is fine. Whatever important, that all I have discussed. The same rule apply in NBFC also. Okay guys, done. So now let's complete a small question. Okay guys, so from this we have to calculate the net own fund. From this we need to calculate the net own fund. So guys, you can take a screenshot. That's why this is PPT, not PDF. Pooja, in that last question, I told you that whatever overdrawn balance, it is called overdraft. So in balance sheet, we have to add that 225 in current account also and in loan also, because they have net of regular accounts versus overdrawn accounts, and they have net of shown 970, which is wrong treatment. So we have to add 225 in 970. So it means 995 are regular current accounts, okay, and 225 are overdrawn, means one type of loan given to the account holder. So that 225 should be treated as loan and should be added to the loan or overdraft, whatever given in a question. Okay, Pooja? Rafika, mail me that. Okay. Okay, guys. So you are given this amounts: leased out assets, investment in subsidiaries, cash and bank balance, loans, deposits, and paid up share capital, as well as free reserves. This is what you are given. And now from that, we need to calculate the net own fund. We are supposed to calculate the net own fund. And as per the logic, first we will calculate own fund. Okay. So guys, if we want to calculate own fund, then guys, please, from the question you find out first of all these three. You have to add it: paid up share capital, preference shares which are compulsory convert into the equity, free reserves, share premium, and capital reserve arising out of the sale of assets. So first 5 you have to add, so you will get own fund. So guys, first add this 5: paid up share capital, preference shares compulsory converted into the equity, free reserves, share premium, and capital reserve arising out of the sale of assets. First add this 5, then we'll minus this 3. So guys, first add this 5 and tell me what is your total of this 5. What is your total of this 5? Pooja, generally they don't ask question of balance sheet, but still we have discussed that 1 to 5 are liability, 6 to 11 are assets, 12 is a contingent liability. Okay, and sometimes they ask separate short question. Okay, short note on schedule 12 contingent liability. So there were 5 things are there, we discussed that also. So you just remember the name of schedule. Okay, capital and reserves and deposits and all that, nothing much, because generally the weightage of this chapter they don't ask the balance sheet, but you can't ignore entirely. Okay, therefore we have just refer the schedules name and formats, but important schedule are invest advanced schedule. Okay, and if you just remember the names, then at least you can put, as you are doing in a company final accounts. Okay, you name the schedules, right? In that you can do that. Yes guys, first of all please let me know total of this 5. Total of this 5. Yes guys, out of that 5 only 2 things are there, equity and reserves. Perfect guys, like this. Okay, now friend, let's move to the next part. Now out of this 5, we have to minus first accumulated losses, second intangible assets, and third defer revenue expenditure. 3 things should be minus. So check it guys, from these 3 whether you are given anything which should be minus from this. Losses, intangible assets, and defer revenue expenditure. If it is given, then you should minus from the 500. You should minus from the 500. So are you given anything guys? So guys, I think in that slide, there was a small overlapping. Okay. In your first question slide, there was small overlapping. So I have removed that. So deferred expenditure, you are given 100. Deferred expenditure, you are given 100. Okay. So 100 should be minus from that. So this is a perfect because in that slide, little bit overlapping was there. So defer is 100. So this 100 will be minus from there. This 100 will be minus from there. So like this, it will be 400. It will be 400. So this is what all plus 5 minus 3. All plus 5 minus 3. Now we will switch over to the net part. We will switch over to the net part. Okay. In net part, what is there? Sir, in net part, we have to minus is all investment subsidiaries, all investments in subsidiaries, but to the extent of such sum exceeds 10% of own fund. To the extent such sum exceeds 10% of own fund. So first we will have to understand how much is your investment in subsidiaries. How much is your investment in subsidiaries? And then we have to minus it. So guys, how much is your investment of subsidiaries? It is 150 plus 50. It is 150 plus 50. So 200. So it is 200. It is 200. 150 plus 50, that is 200. Okay. So we need to minus this 200 with the sum exceeds 10% of own funds. Own funds. So first of all, we will write 200 like this, guys. Investment in subsidiaries 200. But we are not supposed to minus 200. We will minus 200 exceeds 10% of 400. 200 exceeds 10% of 400, that is 40. So we will discuss, we will deduct not 200 but 200 minus 40. So if we deduct not 200 but 200 minus 40, that is 160, then let me know, guys, what will be the final answer. What will be the final answer? We will not deduct from this 400 200, but we will deduct from this 400 160, and therefore what will be the final last answer? Yes, guys. Yes, Vikas, we will not deduct 200, but we will deduct 200 minus 40, that is 160. Yes, 160 will minus. So net will be 240. Absolutely correct, guys. Absolutely correct. It should be 240. So it will be 240, guys. Absolutely correct. So we will minus from this 400 160. So total is 200. 10 percentage of 400, that is 40. So from this 200 we will minus 40, so it will be 60. And from this 400 we will not minus 200 but we will minus 60. So final answer is 240, guys. Simple. Okay, guys, I think we can go ahead, guys. 240, perfect. All are correct. Sandeep is correct. Ram Prakash Rajan is correct. Surbi is correct. Shruti is correct. Harsh is correct. And Pooja, I think you have a typing mistake. It should be 240, right? 40 you will minus, so it will be 240. Perfect. Okay, without wasting time, let's move to further. Okay, what will be next important point? So this is very important. Now, next one is, which is important. So guys, here you have to just see the name. Okay, nothing new. NSI ND, non-systematically important non-deposit taking. And this is systematically important. Sirf naam, only name. This is NSI and this is SI. Sirf naam, sirf name, nothing else. Definitions are not important. Yes, this is important. Always this is important. Income recognition. When we should consider interest income as income. Guys, if you recall our banking chapter, we understand that in that banking chapter that if the account is regular, if the account is performing, if it is performing asset, then interest should be recognized as income on accrual basis. That is received plus not received, both should be considered as income. But as far as NPA is concerned, it should be considered as income only on cash basis when it is actually received. Okay, so here logically the same rules are there. Income including interest, discount or other charges on NPA shall be recognized only when it is actually realized. The same rule is that, guys. The same rule is that when it is actually realized. Same rule. Now, there is a interesting rule in respect of hire purchase assets. In respect of hire purchase assets, where installments are overdue for more than 3 months, income should be recognized only when higher charges are actually received. So like a NPA, if 3 months overdue is there, then we should consider higher charges as the income only when it is actually received. So cash basis. In respect of lease asset, same rule, when it is overdue for more than 3 months, it should be recognized only when it is actually received. So simply you can say, if some says that it's an NPA account, then you should recognize income interest only when it is actually received. If it is a hire purchase advance, and if there is overdue more than 3 months, then also it will be on a cash basis. And if it is leased asset, same rule is, if overdue is after more than 3 months, then lease rental income also should be accrued as, should be considered as income, not on accrued basis but on a cash basis. So in this all three, it is on a cash basis, nothing new, it is on a cash basis. And the same principle we learn in banking also. In banking also. Now the next important point is, yes, very, very important, extremely important, asset classification. Asset classification. How advances should be classified. How advances should be classified. Okay. So remember guys, it is applied to every NBFCs. So whether it is a systematically or non-systematically, or a deposit taking or a non-deposit taking, it's a standard rule for everyone. Okay, fine, absolutely fine guys, very good. Okay, this is our routine classification which we did in our banking chapter also, standard, substandard, doubtful and loss. Okay, standard assets, as we understand, it means asset in which there is no default. It means they are paying regularly, either principal or interest, so which is does not disclose any problem. No default, standard, very simple, very nice. Now, what is substandard? Okay, guys, they are asking this short note separately, theory part. Okay, like banking, they also ask this short note in a theory part. Now, substandard, as per the which I'm talking about, systematically non-deposit taking. So it is SIND. Okay, SIND. What is the rule? Substandard means an asset which has been classified as NPA. Naturally, first it becomes NPA, then first category substandard for a period not exceeding 12 months. This is absolutely same as banking. Same as banking. First 12 months after NPA, it will be substandard. And if it is renegotiate or restructure account, the same rule after 1 year. But if it is, see, here it was SI. But if it is NSI, if the nature is NSI, then only small change, guys, only small change. Only small change. Instead of 12 months, it will be 18 months. Instead of 12 months, it will be 18 months. This 1 year remains same. This 1 year remains same. Yes, guys. So if they ask in a question classification, then in case of standard assets, no change. In case of substandard, if it is SI, it is 12 month. If it is NSI, it is a 18 month. Okay. Let's move to doubtful. Doubtful. Once again, first we are talking about the SI. Systematically. Doubtful means term loan or lease or hire purchase, whatever, or sundry assets which depends in a substandard category for a period exceeding 12 months. Exceeding, that is more than 12 months. So if any term loan or a leased or hire purchase assets remain in a substandard category for more than 12 months, then after 12 months it will be termed as a doubtful asset. It is about systematically SI. Now, what if it is a NSI? If it is a NSI. If it is a NSI, then once again, guys, like same, it is a 18 month. Okay. It is a 18 month. There's only change. So systematically, it is 12. If it is NSI, it is 18. Okay. And last is loss asset. It's simple. It is a loss asset, nothing to be recovered. So their auditor or inspection department recognize that it will be completely lost. So we have to write off everything. We have to write off everything. So, or we can say 100% provision is required. So finally, concluding part, guys, very important. If it is standard assets, it means no default, no irregularity, account is clear. If it is substandard, then if it is SI, then 12 months in a NPA category. If it is a NSI, 18 months in a NPA category. Doubtful, if it is SI, more than 12 months in substandard. If it is NSI, more than 18 months in a substandard. And loss assets means is it loss identified by the any auditor or inspection department. So this important classification, very important classification is over and out. So just revise this, guys. I am giving you 30 seconds, then we'll switch over to the next point. Just revise this, guys. Simple things. Then we'll go to the NPA, which is equally important point. Then guys, can we switch over to next point? Yes, Pooja, you are right. And that's why students are very happy when something is from this chapter. Because they feel they can easily score 4 to 6 marks. Sandeep, NPA, the first stage when accounts become bad, it is categorized as NPA. Then first, after, say for example, in banking, if there is a 90 days irregularity, then it will be considered as NPA. If this irregularity continue for 12 months, it will be considered as substandard. And after 12 months, it will be termed as doubtful. And after that, it is loss. So it's a, अगर हिंदी में बोले तो पहले वो खराब अकाउंट हुआ, उसके बाद थोड़ा और खराब हुआ, उसके बाद बहुत खराब हुआ और उसके बाद पूरा खराब हुआ, राइट? ओके, okay guys, enough time is there. Now we can switch over to the next part, NPA. देखो संदीप, आप याद कर रहे थे, वो NPA आ गया. Okay, so NPA means, first of all, let's read what is that. NPA means an assets in respect of which interest remains overdue for a period of 6 months. Means an advances on which interest is remain overdue for 6 months. A term loan including interest, which is overdue once again for 6 months. Demand loan or a call loan, same story, 6 months. Bill discounting, same rule, 6 months. Any other assets, any type of loan, the same rule, 6 months. Even in any account where there is a reimbursement, we have to get reimbursement and it is not done for 6 months. So rule is everywhere 6 months. Everywhere 6 months. So if it is any type of asset where interest overdue of 6 months, term loan, interest or principal overdue 6 months, demand loan 6 months overdue, bill 6 months overdue, reimbursement 6 months overdue, any other asset 6 months overdue. Now a small change. As per the SI, if it is a SI, चाहे वो नॉन डिपॉजिट टेकिंग हो के डिपॉजिट टेकिंग हो, the above 6 month criteria is 3 month. अगर वो SI है, ओके, अगर वो SI है तो above 6 month is 3 month. ओके, और अगर वो NSI है then it is 6 months. So we can say A to F, above A to F where 6 month is written, it is applicable to this NSI. And if it is SI, then instead of 6 months, you have to replace 6 by 3. You have to replace 6 by 3. Okay, guys? So this A to F, what we have learned, this all A to F are applicable as this NSI. But if it is SI, then instead of 6, it will be 3 months. It will be 3 months. Okay. Now only point G is remaining. A to F is got cleared. A to F is clear. If it is NSI 6 months, if it is SI 3 months, got it. Now remaining 2 points. Lease rental. If it is a lease and hire purchase, then it is a 3 months. Then it is a 3 month. But if it is NSI, then it is a 12 months. It is a 12 months. So we can say if it is SI, it is 3 months. If it is NSI, it is a 12 month. If it is a NSI, it is 12 month. If it is SI, it is a 3 months. It is a 3 months. Then guys, a small change. And H is not that important. So A to G are extremely important. A to G are extremely important. So A to F, we have SI, NSI. Okay, if it is NSI, it is 6 months. If it is SI, it is 3 months. And in G, lease, rental and hire purchase, if it is NSI, it is 12 months. If it is SI, it is 3 months as mentioned. Then guys, can we go further? It's easy to understand. Surbi, it's only name, systematically and non-systematically. Nothing else. It is just a name. It's just a bifurcation. And now the extremely important provisioning requirement. Extremely important provisioning requirement. Now friend, very important. If you recall guys, in our banking chapter, we understood that provisioning requirement depends on whether it is doubtful or secured, unsecured, like that. Here also something like this. Okay, the first sentence, the provisioning requirement as given below shall apply to every NBFC, SI, NSI, whatever, every NBFC. Okay. Now first, loan, advances, including bill purchase and bill discounts, all are there. Loans, advances, bill purchase and discount. For this, everything, the rule is there, 100%. If it is unsecured, it is 100%. If it is unsecured, it is 100%. If it is secure, it is unsecure, guys. If it is secure, then up to 1 year, 1 to 3, and more than 3. Up to 1 year, 1 to 3, more than 3, 20, 30, 50. 20, 30, 50. If it is a substandard, then only 10%. Only 10%. And if it is standard, then 0.40%. Guys, if you recall banking, the same rule was there. If you recall banking, then we understand if it is agriculture, SME, real estate, housing, and last is all other, it's 0.40. The same rule here, standard 0.40. Now friend, but it is for what? A small change. SI. Okay. It is SI, it is 0.40. But if it is NSI, then 0.25%, guys. If it is NSI, 0.25%. So guys, extremely important. Once again, I'm repeating, guys, please be fast. Okay. Basically, this applicable to every NBFC. Okay. So every NBFC same rule. If it is loss asset, it is 100%. If it is doubtful unsecured, 100%. If it is doubtful secured, up to 1 year 20, 1 to 3 year 30, more than 3 year 50. If it is substandard, 10%. So till this, everything is common. Only small change in standard asset. If it is SI, then 0.40%. If it is NSI, 0.25% till standard asset. Till standard asset, it means for loss assets, for doubtful asset, okay, secured or unsecured, for substandard, rule are same. You should not see whether it is SI or NSI. This SI is applicable only in standard asset. If it is SI, it is 0.40%. If it is NSI, it is 0.25%, guys. So giving you 30 seconds, please refer this, guys, once again, and then we'll start a question. Please, guys, giving you 30 seconds only. Then, guys, can we start question, guys? Okay, guys. So you are given assets, standard, substandards, doubtful, secured, doubtful, unsecured, and loss. And what is asked in question? Calculate the amount of provision which must be made against the advances as per the NBFC if it is NSI, as well as if it is SI. So I have asked both the concept in a single question. Okay, guys. I hope you have taken the screenshot, and can we go ahead, guys? Can we go ahead, friends? Yes. I hope you have taken the screenshot, guys. Can we go ahead? Okay, friend. So what will be the first requirement? You have to prepare that 4 columns, particulars, amount, percentage, and NPA provision. So first we will start with if it is non-systematically. So guys, you will have to prepare like this. First, we will talk about if it is NSI. If it is NSI. Okay, 4 columns routine. First, if it is NSI. Yes, guys, prepare these 4 columns and then we will put percentage of provision and then multiplication, guys. And as we discuss, whether it is NSI or SI, the only change is in standard assets. Remaining all remain same. So guys, please put the percentage and let me know what will be your answer. Yes, guys. What will be your answer? Okay, Ria is very quick. That's cool. She got the answer. So guys, this is the only change. As you can see on the screen, SI, NSI. Once again, guys, please see on the screen. Okay, because I have both the answers. Someone says it is 412. Someone say it is 439. At present, we are talking about NSI. At present, we are talking about NSI. 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 You can see on the screen NSI what is to be done. So it is 412 or 439. Sandeep, recheck the answer. Vrinda, recheck. Shruti, recheck. Riya, recheck. Mahendra, recheck. Vikas, recheck. Okay, इन लोगों ने NSI क्या बताया? Okay, so whatever name I have told, they are correct. Okay, हाँ, because they have correctly said NSI. Okay, fine. Then who are seems to be wrong? एक second. Sorry, Ria, you need to recheck. Shruti, Nitin, and Surbhi. Okay, so now people are getting it correctly. थोड़ा name लिखने में गड़बड़ हो गई थी. NSI, SI. Okay, so at present we are talking about NSI, and if it is NSI, yes, guys, now you got it perfectly. Now you got it perfectly, like this, guys. Now you got it perfect. It is 412. Perfect, guys. Absolutely correct. Very nice. Absolutely correct. 412. If it is NSI, 0.25. Yes, guys, this is first only change. 0.25. Only change. 0.25. Only change. 0.25. Yes, guys. And if it is SI, next slide I am sharing, I have colored with differences. The answer is 439. So if it is NSI, you can see on the screen, it is 412. So here it will be 0.25 in standard assets. Okay. If it is SI, it will be 0.40. Then guys, 412 and 439, all are correct. Yes, all are correct. SI, NSI, all are perfect. Yes, dear. Yes, Ria, you were right. All were almost right. NSI, 0.25 and 0.40. All are correct. Perfectly all right, guys. Perfectly all right. Then guys, can we switch over to next point? Yes, guys. Can we switch over to next point? Okay. Perfect. So this point, till this point we did it, guys. Okay. Switch over to the next point. If you see that, guys, it was A. Okay, I'm just making it clear. It is A regarding loans, advances, other credit facilities, bill purchase and discounted. Okay. Now we are talking about B. Okay. B is regarding leasing and hire purchase. Okay. What is to be done? This is the rule. If hire charges or lease rentals are overdue up to 12 months, it's a nil. No provision. Up to 12 months, no provision. If they are overdue for more than 12 months, up to 24, that is 12 to 24, it is 10%. If it is overdue 24 to 36, it is a 40%. If it is overdue 36 to 48, it is 70%. And more than 48, it is 100%. It is 100%. Simple, guys, simple. So if it is a lease or hire purchase assets, okay, then you have to see what is the month outstanding or overdue for the hire charges and lease rental. If lease rental and hire charges are up to 12 months, then no provision is required. If it is more than 12 months but less than 24, that is 12 to 24, 10%, 24 to 36, 40%, 36 to 48, 70%, and more than 48 months, it is 100%. What is the meaning of net book value? Guys, it's a basically it is an aggregate of overdue and future installments reduced by something finance charges. Or in case of lease asset, it is aggregate of capital portion of overdue lease rental amount and book value of lease asset. But this will not ask, the meaning will not ask in question. You will be given this. So generally, till this date, all question were asked, it is given in question. Because why it is given in question, guys? Because if you see that everywhere you have to make this percentage on net book value, and this will be given in a question. Don't worry. So it's a small clarification, but it's a big short note. So if you don't read it, it is fine, because generally it will be given in a question. Net book value will be given in question. Institute will try to understand whether you know the provision amount, that is up to 12 months is nil, 12 to 24 10%, 24 to 36 40%, 36 to 48 17, then 100. This requires to be done. Net book value will be given in a question. Yes, guys, giving you 30 seconds. Please refer it, guys, so that we can start the question. Net book value, yes. Yes, Rupesh, you are right. It will be given in question. Don't worry. Okay, guys, let's start the question. Just a minute, friend. Okay, friend. Yes, guys, you can take a screenshot, then we'll start the question, please. Take a screenshot, guys. Then, guys, so now we need to calculate the provision. So you will make 3 columns, guys. You can make a 3 column because percentage will be differ. So like this, you can prepare 3 columns, 12 to 24, 24 to 36, 36 to 48, and more than 48. Please make this and remaining 2 column, write the percentage and amount, guys. Remember, it will be on net book value. Yes, guys, giving you 2-3 minutes. Yes, guys, I'm getting the answers. Answers are there. Vikas is correct. Harsh is correct. Sandeep is correct. Ria is correct. Hina is correct. Very nice. Remaining students, be fast. Surbhi correct. Rohan correct. Shruti correct. Ria correct. Okay, so now we can't wait, guys. All are correct almost. And some students are still typing. Okay, so this is the final answer. Very nice. Very nice. Perfect. And guys, okay, let's switch over to the next point. So guys, till this point we have completed, okay, which is important one. And now friend, apart from this, the question whatever here are easy, we have included this all. And then theory part. So in theory part, now there is not that much important at all. This is percentage of weightage, but this is not that important. And after that, there will be summary and repetition of what we discuss. Okay, guys. So now one important question, which is in material also, which was asked 2 times before in exams of our institute. That type of question, let's we do. Just a minute. Let me show that question first. One question, very good question. Okay, I am sharing the question, guys. Just a minute. Okay, guys. So, guys, first of all, take a screenshot and then we will. Okay, guys. Now you can see proper. So take a screenshot, read it properly. Then we are starting the answer, guys. Ria, we are doing same type of question. Okay. Yes. Because then if you do this, you have a chance to do another question of material. So you will have a good practice. That's why, nothing else. Okay, guys, can we start? Okay, guys. So basically, we are talking about SI. Okay, we are talking about SI. And when they say do the classification, friend, do the classification, so we can understand, sir, in this account, there may be standard account, there may be substandard, there may be doubtful, there may be doubtful 1, 2, 3, 5, whatever years, and there may be loss assets. Okay, guys. So first of all, you have to write like this. Okay, write like this, guys, please. Okay. So total is given 400. We will bifurcate how much standards, how much substandard, how much doubtful, how much loss, and how much total overdue. So first prepare a blank like this. Okay, absolutely blank like this. Then we will start it. Please, guys. Then, guys, can we start? Yeah, total given 400. Then we'll put it at a different places. Yes, guys, can we start? Okay, friend. So first, let's start with this. It says that 400 lakhs, of which there are 400 accounts. So they said that it provides you with the following information regarding its outstanding amount 400 lakhs, of which installments are overdue on 400 accounts for last 1 month. So there are 400 accounts on which 1 month is outstanding and amount overdue is 80 lakhs. Amount overdue is 80 lakhs. So guys, tell me, if it is 1 month overdue, if it is 1 month overdue, only 1 month overdue. Okay, so then it should be then it should be which nature? Then it should be which nature? Okay. And guys, you have to keep this page of module with you. I'm just repeating. Okay. See, asset classification, every NBFC, we understood that. Okay. Standard, no default. Substandard, if it is SI, we understood. If it is SI, then doubtful. If it is SI, then doubtful. It should be 12 months in substandard, and then there will be loss. So you should keep in mind the 12-month criteria. Okay. Now this page, please guys, this page you should refer when we are doing the sum 9.19 onwards. 2 pages are there. Please put this page so that you can understand very easily. And we are doing the sum in which there is a SI. Yes guys, it's a SI. You can refer. It's a SI. So 12-month criteria will be there. So 12-month criteria will be there. Now 80 lakhs overdue, but only 1 month. Only 1 month. So it is nothing, guys. It's a standard accounts. It's a nothing. It's a standard. Okay. So what we will do, we will write like this. Please guys, like this. You will write it in a standard. You will write it as a standard because it's a only 1 month. Only 1 month. It is a standard. Okay guys, now let's read question once again. Now if you read it once again guys, on 24 accounts overdue 48, it is 24 months. It is 24 months. Once again, 2 months is also the standard. Also the standard, because only 2 months. It is also the standard. So it will be also standard. It will be also standard. So both of this will be part of standard. So you will write both of this in a standard. 80 is standard, 48 is standard. 80 is standard, 48 is standard. Under standard category. Under the standard category. Okay. Now once again read it guys. Ten account for more than 30 months, it is 40 lakhs. It is 40 lakhs. Now more than 30 months. More than 30 months. But more than 30 months means how much? 36 months, 48 months, 60 months. We need to understand. So of this clarification is here. Okay. I'm highlighting out of 10 accounts overdue more than 30 months. Okay, 6 accounts are already identified as substandard category for more than 12 months, friend. More than 12 months. Very clear, guys. Very clear. 6 accounts are already identified as a substandard category for more than 12 months. Now refer that module page. Substandard category more than 12 months, guys. So where we should put this, where we can put this. Yes, guys. The question says that 6 accounts are already identified as substandard category for more than 12 months. More than 12 months. More than 12 months. If account is under substandard category for more than 12 months, then guys, it is a doubtful asset. Then it is a doubtful assets. Yes, guys, it's a doubtful assets. Bilkul. So this 6 accounts having a 12 will be under the category of doubtful. So you will write like this. It is under the category of doubtful because it is under substandard category for a period more than 12 months. More than 12 months. So it will be under the category of doubtful. Under the category of doubtful. Yes, guys, clear? Yes? Okay, guys? Okay, what about other 4? Okay, let's read the question. Let's read the question. And other are identified as substandard category for a period less than 12 months. If it is in substandard less than 12 months, then they are in substandard only. If it is in substandard more than 12 months, it is doubtful. If it is in substandard less than 12 months, it is substandard only. So remaining 4 account, total there were 30 lakhs, guys. See here once again. Okay, here we are talking about this. Okay, 10 account, 40 lakhs. Out of which 6 accounts, 12 lakhs are there. So remaining accounts, which are 4 accounts and 28 lakhs. 4 accounts and 28 lakhs. And 4 account 28 lakhs will be under naturally substandard category. Under the substandard category. Yes, guys. So it will be under substandard categories. I am showing the answer. Yes, guys. Yes. So this 28 will be substandard and this 12 will be doubtful. It is less than 12 months. It is more than 12 months. Yes, guys. Yes. Yes. Okay. Let's go further. And on 4 accounts for more than 3 years, it is 40 lakh already identified in a substandard category. 4 accounts, more than 3 years, overdue is 40 lakhs, already identified as a substandard category. Yes, guys. So substandard categories more than 3 years. Okay. So naturally it is a doubtful, guys. It is a doubtful. It is a doubtful. So it will be under doubtful because it is in substandard more than 3 years. Yes, guys. Like this. It will be like this. For account, it will be in a substandard category. 4 accounts more than 3 years. 40. So if it is in substandard more than 12 months, it will be doubtful. It is more than 3 years. So it's a complete doubtful, guys. Okay, let's move to the question. And one more 20 lakh which has been identified as non-recoverable by management. Non-recoverable, that is loss. Non-recoverable, that is loss, guys. It's a purely loss. We have to identify as a loss. So it will be under the category of loss assets. It will be under the category of loss assets. This one. Loss account. It is loss. 20 lakh. It's a loss. It's a loss. Yes, guys. Okay, fine. And after this sentence, if you see the question, then after this 20 lakh, this sentence we have already done, guys. After 20, this 10 accounts, 6 are under doubtful category and 4 are under substandard category we have done. So almost question is over. Almost question is over. Now, guys, if you say it's a total 40 lakhs, total 400, total is 400. And if you now see the balancing figure, then you will get 172. Okay, 172 like this, guys. Like this. So total is 400, and in this 400 you have identified this much. Okay, 80, 48, 28, 12, 40, 20. So if you deduct from 400 all of this total, then you will get balancing figure 172. And if it is nothing specified, it is naturally standard accounts. It is standard accounts. Yes, guys. It will be standard accounts. So this is entire question, guys. Entire answer. Perfectly you can see now. So whatever given we have done. Got it, guys? 172, it's a balancing figure. And as nothing specified, it's a standard category. Done, guys? Over and out, we can conclude. Okay, guys, so here is the end of this chapter, small chapter. We will have a small break, and after a break, we will start consolidation. Okay, guys, after a break, we will start consolidation. So, break of 5 to 7 minutes. Okay, guys, and after a break, we will start. After break, we will start consolidation. Okay, guys, see you after 5 to 7 minutes. We'll start consolidation, guys. See you after small break. Vrinda and Ria, I got your message here in chat box. If time permits, we will do that. Otherwise, you can mail me. Okay. We will discuss on email. Fine. Okay, guys. Now, consolidation. So, you can simply say, like other big chapter, weightage of 12 to 16 marks. Yes, guys. Weightage is 12 to 16 marks. Basically, it's a chapter of CA final, but shifted little bit of reasonable questions in intermediate. And therefore, if you see the here, it is very much clearly clarified. As per syllabus, this chapter includes simple problems on consolidation with a single subsidiaries. Yes, in final there is a different story and excludes problem involving acquisition. So वो सब यहाँ पर नहीं. So we will have a reasonably simple questions. Okay. So guys, basically it's about the group of companies. Okay. So when you can say group of companies means the companies having a holding company and subsidiary company. Now, important point is a definition of subsidiary company. So you must have learned this in law also, that what is the subsidiary? It means in which the holding company, in which the wording is, in which the holding company controls the composition of board of director, or the wording is or, not and, or exercise or control more than one half of the total share capital, either in its own name or with combination of one or more subsidiary companies. So if say for example company H control the composition of board of director of company S, or company H has more than 50% share capital of company S, and this is more than 50% will be considered as either entire 51% is owned by H company or H plus its other subsidiary. Okay, say for example A, B, C are also subsidiary of H. Then H plus A plus B total holding in company S is more than 50%. Then S is also known as subsidiary of H. Then S is also known as subsidiary of H. So this is simple definition, guys. What is the meaning of control the composition of board of director? It means H has a power to appoint or remove all or major director of subsidiary company. So if H has a power, either he can appoint or remove all or major director of S, then S will be known as subsidiary of H. This is the basic thing. So this is definition. And after that, the important one is, which will be part of every big question, even every small question. that is minority interest. Now, what is minority interest? The name itself suggests it is interest owned by minority. And when I say holding company is a company in which holding company has a shareholding more than 50%, guys. So if say for example, H company has 51% holding in company S. So H has a 51%. So remaining 49% are in minority. Yes. So minority means the shareholder other than holding company. Minority means shareholders other than holding company, that is outsider, that is outsider. So this is the interest which are not owned by parent. Parent means holding company. Parents mean holding company. So when holding company own 51%, then minority is called 49%. 49%. Wholly owned and partially owned subsidiary, it's easy. You can read at your own, not so much important. Now, friend, why we need to prepare CFS? Why this chapter is there? Okay, why we have to prepare conso accounts? So, definitely, it is for the better judgment, transparency, and clarity of the information as a single entity. Okay, then important part is advantage. Very simple, nothing new. Yes, this is what exactly. What is required to be prepared? Okay, CFS means what? So CFS means this 4. CFS means this 4. CFS, it is conso balance sheet, it's a conso P&L, it is a conso cash flow, it's a conso notes to accounts. Just 4 things. Simple. Now, guys, this is extremely important. Conso procedures. Conso procedure. This we will do step by step when we will start long questions. Yes, because when in long question we have to prepare conso statements, P&L balance sheet. Okay, then this exactly this step will be applicable. So this we will follow when we will do long questions. There are 8 steps. And now, friend, very important, extremely important, very much important, which will be part of every long question. So, minority interest will be part of every long question. The COC also will be part of every long question, even so many short questions. What is goodwill CR? What is COC? Then the concept is very much clear. And this you must have learned in foundation also, in share capital and debenture chapter. Okay, in foundation, if you learn the chapter, guys, then it's a small point called when shares or debenture are issued other than cash. And in that point, this was covered. And here it is very simple. Whatever holding company has actually paid, that is cost incurred to the holding company to purchase share in the subsidiary company. If holding company wants to purchase 51% holding in S subsidiary company, to purchase that, whatever amount paid him, whatever amount paid by H to S, that amount paid should be compared with equity. If he has paid more amount, say for example, for 51%, he has paid 10 lakhs. and the worth of 51%, equity of 51% is 8 lakhs. So it's very simple, guys. Holding company got the net worth of 8 lakhs, and for 8 lakhs he has paid 10 lakhs. So why he has paid 2 lakhs more? Because subsidiary company has a goodwill in the market. So if the purchase cost is exceeding the net worth, okay, then it is goodwill because you have excess paid. And if you are less paid, if holding company has paid 6 lakhs, so 2 lakh less. And if holding company has paid 2 lakhs lakh, so it's a benefit to the holding company because he has paid 2 lakhs lakh. This benefit is not a revenue benefit, it's a capital benefit, therefore it is known as a capital reserve. So simply what we have to compare, sir, we have to compare purchase cost with the equity or net worth of the subsidiary. If purchase cost is more, it is a goodwill, it will be asset side of the holding company. If holding company is less paid, it's a benefit to the holding company. It is under the heading of capital reserve. Now friend, if you read the question very carefully, equity is defined as the residual interest in the asset of the enterprise after deducting all liabilities. In short, it is equal to net worth. Equal to net worth. Okay, and what we will compare? We will compare cost of investment with this equity. If cost of investment is more, it is goodwill. If cost of investment is less, it is a capital reserve. And now what is a net worth, guys? It is a very simple concept. Just explain you guys, okay? In balance sheet, it's a capital, it's a liability, it's an asset, C equal to asset minus liability. It is known as net worth. Got it, friends? You can recall your foundation theory chapters, initially unit 1, unit 2 theory chapters. In that, it's a balance sheet equation. It is known as a balance sheet equation. Okay. And now guys, if I can say A minus L equal to C, it means it is net worth. Guys, remember very carefully, guys, when I can C equal to A minus L, but C in company's questions, C includes capital plus reserves. Yes, guys, write very carefully, guys. When I say net worth, it is nothing but A minus L. And what is A minus L? It is capital plus reserves. Capital plus reserves. So that capital plus reserves, that is equity, compare with the cost of purchase. If holding company has paid more cost, it is goodwill. If it is paid less cost, it is capital reserve. And this calculation you must have done in other chapters also. Then guys, can we go further? Okay. Now guys, very simple, small. See, initial 4-5 questions we'll do from here are short questions. Good questions, base questions. Okay, let's freeze it. Let's freeze it. Now, H Limited purchase 70% equity. Now guys, other meaning, if H is holding 70%, it means minority interest is 30%. Okay, even if it is in this question, MI is not asked, I am just explaining from the beginning. Okay, now on that date, the paid up capital was 10,000 into 10, that is 1 lakh. Reserves are also 1 lakh. So I can say this, guys, capital is 1 lakh. Reserve is also 1 lakh. And he paid 1,60,000 to acquire 70%. He paid 1,60,000. Okay. Now, revaluation is there. And there was a revaluation loss of 20,000. Revaluation loss of 20,000. Revaluation loss of 20,000. And just we understand, just we understand, capital means capital plus reserves. Capital means capital plus reserves. So now, friend, it is very much easy to understand. So this entire story into 70%. Okay, guys, 1 lakh capital, 1 lakh reserves, 20,000 loss, entire into 70%. So we got 126. You can also refer the ICAI answer. So we got 126. Simple. 126. But sir, for 126, we paid 1,60,000. Yes. For 126, we paid 160. We paid more, guys. We pay more. We pay 34,000 more. And if you have paid more, okay. Now similar second question. Similar. Same story, guys. 70%. 1 lakh is a capital. 1 lakh is a reserve and surplus. And now it's a profit. 20,000 is a profit. So it is 154. It's a 154. And you have paid 130. You have paid 130. So it means 24,000 is less paid by holding. It's a benefit to holding company. And this benefit is known as capital reserve, friends. This benefit is known as capital reserve. Yes, guys. So he got the net worth of 1,54,000. And to get 1,54,000 net worth, he paid only 130. So 24,000 is less paid by holding company. It's a benefit to holding company. And this benefit is known as capital reserve. This benefit is known as capital reserve. Yes, guys. Clear? Yeah. Okay, friend. MI, we have done this. It is not owned by holding company. Very simple. It is not owned by holding company. So it's an outside shareholder. Other than holding, it's a outside shareholder. And guys, when we'll do the long questions, in every question, either it is P&L or a balance sheet, MI interest in a profits as well as assets and liabilities will be shown separately. We will calculate separately every question. Now, friend, profit and loss of subsidiary company. Now, for the purpose of CFS, very, very nice, very, very important. For the purpose of CFS, all reserves and profit should be classified as pre and post. Should be classified as pre and post. Profit and loss earned or incurred by the subsidiary company up to the, guys, remember very carefully, up to the date of acquisition. So you can say whatever profit and loss of the subsidiary company till the date of acquisition are naturally not belong to holding company. Yes, it is not belong to holding company, because this profits has been earned by subsidiary before holding company purchased the share, and therefore holding company has no right that he can get this, and therefore for him it is a pre, that is capital profit and loss, not revenue. It's a capital profit and loss. It's a capital profit and loss. If you have complete the chapter pre and post of intermediate account, pre and post, then you find out separate column pre and post. You share the sales, COGS, all expenses, time basis, turnover basis, right? And what you understand in that chapter, sir, whatever pre-profit is there, it is my capital profit. And whatever post profit is that, it is my revenue profit. Yes, in pre and post chapter, same concept. Pre, by time period, by time ratio you divide. Sir, the company was formed on 1st of May, but the year started from 1st January. So January, February, March, April, 4 is pre and 8 is post. So all the time expenses will be in ratio of 4:8, and remaining expense on turnover ratio, you have two columns. Then you will find out pre-profit. Pre-profit means the profit before acquisition. And there was a capital profit. Same logic. The profit earned by subsidiary before acquisition of equity, and therefore it's a pre and should be termed as a capital profit and loss. Okay. And it is after post, then it is holding company's profit, revenue profit. It is revenue profit. And remember, guys, whatever profit, pre or post, MI will be there, minority will be there. So in every calculation, whatever sharing will be of holding company, there will be share of the MI also, and you have to calculate MI also simultaneously. Now, guys, what is about post? The reserve and profit and loss of subsidiary company representing holding company's interest in post acquisition are revenue profits, and this will be added to the reserves and profit of holding company. So if it is a post profit, post reserve, then it is a revenue income, revenue profit added to the holding company's reserves and holding company's P&L. So if it is a paragraph about post, guys, I hope you are writing in your module or underline in your module, because these are the very important points, guys. And these all important points which will be once again taken into care when we will start long questions. So these are the important points, and therefore we are discussing in length and detail. So this paragraph is about pre, and this paragraph is about post. Revaluation. Very interesting, guys. Whenever there is revaluation of assets and assets of the subsidiary company, so automatically its treatment should be given by holding company. Okay. Now, if revaluation is done it is generally known as a capital profit or loss. But if it is said that such revaluation is after the acquisition, post period, then it is revenue. Same story like above, guys. If revaluation is done before acquisition, it's a capital profit and loss. If it is after acquisition, it's a revenue profit and loss. And it is important for doing adjustment of depreciation also. Depreciation also. So revaluation. Okay, a small question is there. Very nice question, guys. We will complete this question and then we will conclude the session. Okay. Ash Limited acquired 16,000 equity share of 10 each on 1st October, guys. On 1st October for 3,06,000. It's a cost of purchase. It's a cost of purchase. The PL account is 10,000 on 1st April. The plant and machinery which stood in the books as a 1,50,000 is considered 1,80,000 on the date of acquisition. So guys, this is revalued amount and this is book value. And this is the information given. Okay guys, it's a long question. We will do in the next session better because we will understand very carefully and purely. Okay, so in next session, which is on Wednesday, okay, we'll start with this question. We will complete 6-7 questions, different concepts, short questions, and then we will start complete long questions. Okay, so guys, from the next session we will start this consolidation from this question only. Then some 5-6 questions are short questions, reasonably short questions, and then there will be full-fledged 16-mark long questions. Okay guys, so see you on Wednesday, same time, that is 7 morning, and we will continue with the consolidation from this point only. Keep model with you, it will be better. You can underline or write something. So till that guys, keep smiling, spread smiling, do study well. If any query, you can write me on my name, CA Mihir Pujara, CAMIHIR PUJARA, CA Mihir Pujara at gmail.com. Till that, have a nice time guys. See you on Wednesday morning. Goodbye. Do study well. Thank you guys. Thank you. Thank you, Vikas. Yes, Tanu. So if you are done pre and post, this concept little bit more clear to you. Thank you guys.